Good morning. Welcome to the 2020 OASFA Counselor Workshops. We are glad you are with us today. We are sad that we are doing these virtually this year and not in person, but hope it is an opportunity for perhaps more folks to participate as we do the workshops over the next couple of months. My name is Morley Keller, and I'm one of the presenters today. I'm with the National College Attainment Network. I'm going to ask my co-presenters to introduce themselves. So Cody.
Good morning, everybody. My name is Cody McMillan. I work at the University of Dayton, work in both admission and financial aid. So welcome. Thank you all for coming.
And Faith?
Good morning, everyone. I am Faith Phillips. I am the Director of Student Financial Services at Central Ohio Technical College and the Ohio State University at Newark, and we very much appreciate you being here with us this morning.
Thanks, guys. You will hear from them throughout the presentation today. Just a reminder that the workshop today is being brought to you by OASFA, the State Financial Aid Association. You have permission to use any of the materials from this. We will be posting the presentation, recorded presentation, but we will not be posting it until after the last workshop in the month of December. We have placed today in your handout section on your panel the Ohio FAFSA priority deadline date document. We know that is a handy tool for the counselors to use and to share with students so that they know at what point in time their documents are due. As we go through the presentation today, we're going to ask that you type your questions in the question box. We will address some of them as we go through. Others will hold and finish those at the end of the presentation. On the agenda today, we're going to talk about updates to the FAFSA form. We're going to talk to you about federal verification. We're going to talk about financial aid award letters. We are going to talk about special circumstances, which we will probably spend a little more time on than normal due to the very unusual year that we've had and the effects that many families have had on their income during the year 2020. We're going to talk about federal aid updates, state aid updates, and then we have lots of resources that we want to share with you. So the FAFSA updates for this year, we'll just quickly hit on the FSA ID. For those of you who have been counseling for a while, you will know that this is the username and password that students need to have in order to do everything electronically with their FAFSA. You can encourage your students, if they don't already have an FSA ID, to please go get one. Before they start the FAFSA. It'll make the process a little smoother. In addition, if it is a dependent student and there's going to be parent information on the FAFSA, one of the parents is also going to need an FSA ID, and it really is ideal to get those set up ahead of starting the FAFSA. Please know that when they set up their FSA ID, they are going to need an email address or a mobile phone number to verify. Just a reminder that the student and the parent have to have separate email addresses. They have to have separate mobile phone numbers, unique usernames, so they cannot overlap in any way, shape, or form. And we really encourage the students when they set theirs up, if your high school is kind enough to have an email address for their students, that they not use that, because those generally tend to expire when the student graduates from school. So we would encourage them to set up their own unique email address with a Gmail or something like that, so that they would have an email address that's not going to expire. This is a screenshot when you're getting ready to start the FAFSA. As you know, FAFSA.gov is the website where students can go to get their FAFSA completed. They will be indicating for your high school seniors that they're new to the FAFSA. They can click the Start Here button. It is going to ask for them to indicate their role. For example, is the person starting the FAFSA, are they clicking the I am the student, or are they clicking the I am the parent button on the screen? And then using the FSA ID to get started. So that's what it's going to look like when they get ready to start the FAFSA. The good news, if you are a returning school counselor and have dealt with the FAFSA for the 21-22 school year literally had no changes in the questions. So we are not going to spend a lot of time today going through the FAFSA. And literally the change that occurred is there is a question on the FAFSA related to the filing of a Schedule 1 in the tax process. Last year, you had to manually answer the question. This year, if the family is able to use the IRS DRT to transfer their information directly into the FAFSA, the Schedule 1 question will now be automatically transferred. So it will not require a manual answer to the question. And of course, when on the screen or when the student aid report comes for the Schedule 1 question, they will see the words transferred from IRS, just like they will in all the other adjusted gross income and questions that are typically transferred over from the IRS DRT. If they cannot use it, they will have to answer it manually, and there are exceptions. Capital gains are no longer an exception this year to being able to answer yes or no to the question, and they have added virtual currency as one of the exception options. For your families, the low-income families, for those who file the FAFSA and may be entitled to get the automatic zero EFC, that family, that income has increased from $26,000 to $27,000. So families filing with income below that will most likely be eligible for an auto zero EFC. The only other modifications on the FAFSA are some references to line items on the tax returns. There were a few line item changes on the 2019 tax return. That is the income year that the students who are filing the FAFSA for next year will be asked for. And then the question regarding untaxed portion of IRAs and pensions is no longer combined. It's separated back out on the form. So right there is sort of the total sum changes on a FAFSA. So we hope that you will be able to assist your families as they go through the process. Let's take a look at how Ohio did with FAFSA completion numbers for last year's class. As of 9/11, around the country, 4.2% drop in the number of FAFSAs completed by the class of compared to the class of 19. So the class of 2020 around the country, 4.2 less FAFSA were completed. Only one state had an increase for their class of 20 compared to the class of 19, and that was Hawaii. And Hawaii's increase was like 0.1%. When we take a look at Ohio, unfortunately, Ohio didn't fare as well as the national numbers. When we took a look at the class of 20 earlier in September, we were down 5.7% compared to last year. That means about 4,700 less seniors from the class of 20 completed a FAFSA compared to the class of 2019. So while unfortunately that is not good news, still the great news about Ohio, you all do a great job. I think, you know, hats off to our financial aid administrators who do a good job in helping. Ohio is still 15th in the country in terms of FAFSA completion rates for the class. So as of early September, about 64% or just over 64% of the class of 2020 completed FAFSAs. So that means there were over 77,000 FAFSAs completed by students from the class of 2020. as you can imagine, things were thrown off at the end of the school year, and so forms that may have normally been completed in the late spring, maybe got shifted a little bit to summertime because from June 30th to September 11th, we had a 6.7% increase in the number of new FAFSAs completed. So there was a significant number of students who completed their FAFSA over the summer. When we take a look at the overall picture for all Ohio FAFSAs, our incoming students as well as our returning students, Ohio had a drop of about 3.3% in the number of FAFSAs completed. So that means about 17,400 fewer FAFSAs than this time last year. What we know from research is that lower FAFSA rates often predict lower enrollment rates. So we will be taking a look at the numbers later this fall and see what happens to colleges around the country. I think with the unusual situation we're in, everybody's expecting to see enrollment drops for lots of colleges and lots of different groups of students. Just to take a look at, this is some federal data, just to give you an idea. When a high school student files their FAFSA, you can see that they are very likely to send their FAFSA to more schools. So a little over 20% send their FAFSA over 5 schools. We got 21% who send it to 2 to 4, but still over 50% of the filers only send their FAFSA to 1 school. When you take a look at all the filers, including your upper classes, you can imagine the number of FAFSAs being sent to more than 1 school drops pretty dramatically, as most returning students will send it only to the institution they're coming back to. There's a couple different ways that you can track the numbers of FAFSAs that are being completed. If you want to take a look at big Ohio numbers, and even we can get it down to the school district numbers, and if you want to do comparisons for this year and last year or comparisons to other school districts, you can use the Form Your Future website and take a look at the FAFSA tracker that is updated weekly, and it will show aggregate numbers of FAFSAs completed at the state level, district level, building level, for you to be able to do comparisons. Probably the more helpful document to school counselors is the one that the state of Ohio manages, that it's at the Ohio K12.help.FAFSA website. That is your student level data. That is where you can get a report for the students in your district, your building, by name, who has completed the FAFSA. They have done a tremendous number of improvements to the site. And they are going to obviously be ready to launch here now that we are in October. If your school district already has access to the data, great. If for not, we would like you to go to this website. You can get the document that has to be signed by the superintendent. The great news now is each district can designate who accesses the information. So if it makes most sense for a school counselor to be the one who has access to the reports versus it being the superintendent or the head of IT, that is a new possibility with this system and the updates. So we strongly encourage you to get access to your student level FAFSA data. This will help you in your outreach, particularly when we're not in buildings and we need to know who to do outreach to that has maybe submitted admissions applications, but it doesn't look like they've done a FAFSA. So please, we encourage you to use this tool. This is the screenshot of what you would see if you went to Form Your Future. This is a screenshot from the September 11th here, where you can see Ohio was sitting at 15th in the country. But this is just a screenshot for you to see what it looks like when you go to Form Your Future, and then you can tap in and look at individual information for your state, your district, and your building. Okay, at this point, I'm going to turn it over to Cody to talk to you about verification. Cody?
Thank you, Morley. So yeah, we're going to talk about federal verification. Let me go to the next slide. So federal verification, it's really a process wherein, you're confirming that the accuracy of the data that's listed on the student's FAFSA. About 22% of FAFSAs are selected for this process by the U.S. Department of Education. It is somewhat of a random process, although there is an algorithm that they use to kind of select FAFSAs that might contain errors in them. It's not a bad thing if a student is selected for verification in terms of, they didn't do something wrong or anything like that. So it's not that they're being called out. But, if they are selected, they do need to really respond to any request for additional information as quickly as possible, just to kind of make sure that they're getting everything in and that they don't have anything lingering out there. Because if a verification isn't completed for the student by the time that federal student aid needs to be dispersed of the student's account, it's going to hold up that aid from getting dispersed. So it is important that students pay attention to the communication from their college or university that they're applying to or interested in, because they're going to want to make sure to send the requests of documentation that they're requesting. Documentation requests can be a little different depending on the college or university, but in general, this is typically what is required. And so it's a verification worksheet. And again, those can look different depending on the college or university, but that worksheet will collect, some demographic information from the student and family, how many people are in the household, how many students are in college at the same time. Even that worksheet itself may even ask about tax filing statuses of the student, of their parent. And then typically, in addition to that worksheet, they'll have to submit a federal tax return transcript or a copy of a federal tax return. So a few years ago, in order to satisfy verification, students had to obtain a federal tax return transcript. That's no longer the case, thankfully. They are able to use a signed copy of their federal tax return. Or if they don't want to get either of those two documents, they can log back into their FAFSA and update the FAFSA using the IRS data retrieval tool. So if they transfer their information directly from the IRS, that will satisfy that requirement in terms of proving what's on their tax return. There are some people, depending on their tax filing status, that are not going to be able to use the IRS data retrieval tool, and so it will tell them that. But if they are, definitely would encourage everyone to try to use that process, because it is going to be maybe a little bit easier than having to request a federal tax return transcript, or even obtaining a copy of the federal tax return. If someone can't use the IRS data retrieval tool process, definitely they can get a transcript or that federal tax return to satisfy their requirements. They may need to send in W-2 information if they did not file taxes in 2019. And then if a parent or an independent student did not file taxes in 2019, they have to obtain what's called a verification of non-filing letter from the IRS. So it's an official document that says, you do not have to, or you did not have to file taxes in 2019. Just to note that this is not required for dependent students. So dependent students are not required to submit this verification of non-filing. It's only the parents and the independent students who have to do so. And you can go to the next slide. So as I mentioned, that federal income tax return does need to be a signed copy. So it can be a copy that you submitted, but it does need to be signed. And so many times, families submit their tax returns and it's not signed, and we have to go back and say, no, you need to submit something that is signed. And then tax return transcripts, and again, this is either or, so you don't need to send both. But if you want to obtain a copy of your tax return transcript, you can request them online or through that 1-800 number that's listed there. Just a note that in the past, you were able to send tax return transcripts directly to the college university, so you could actually get them mailed to a third party. There was a form you would complete to do so. That is no longer available. So you'll have to have your tax return transcripts sent directly to you, and then you would send them on to the college university that again you're applying to or are interested in. Next slide. So if a family or a student put that they will file taxes in 2019, just as we kind of think about the timeline of everything. So, the FAFSA went live October 1st. So this past week, it's now live. The extension for filing 2019 taxes is October 15th. So this upcoming October 15th. So really the only people that could actually indicate that they will file taxes in 2019 are those who are, literally submitting their FAFSA, on a day like today, and they haven't submitted their 2019 taxes yet. Outside of that, pretty much everyone outside of those, 2 extensions that are listed there, that would be kind of beyond the standard 6-month extension. Outside of that, typically, people aren't going to be able to put that they will file taxes for 2019 because they already should have filed them. Even with the extension of the tax deadline this year to July, that should have already been taken care of unless they, requested that extension. And if so, they really have it through October 15th to submit their taxes and actually put that they will file. If they did indicate on their FAFSA, the college university, will follow up to verify that they, did indeed end up filing, and then they'll have to go back and kind of amend the FAFSA to indicate I did file, and then again have to send their tax transcripts or their copy of their federal tax return. Just to note too that, so while the federal verification process is a federal process, a college or university can actually choose to institutionally select a FAFSA for verification if for some reason they have reason to question something. So even though, this verification process is at the federal level, individual colleges could also select a student for verification, again, if they see some conflicting information. And it's always good to keep in mind as well that, because federal verification is a federal process, all the colleges and universities that the student had their FAFSA sent to, they would need to follow up with that individual college and send in those appropriate documents. So, they're not sending the documents directly to the U.S. Department of Education, they're sending them directly to the college or university. So they would have to do that at each college in which they were selected for verification. Next slide. And something to keep in mind too about, the verification process. So financial aid administrators, we're not required to be tax experts. I definitely would not call myself a tax expert, but we are required to, have some knowledge of when a student or parent is required to file taxes, the type of status that they are able to put on their taxes depending on their current situation. And so really we do have the authority to request that a student or parent, go and file a tax return or amend their tax return, if we feel that they should have filed and they didn't, or that they filed something incorrectly. Maybe they, improperly put that they should be head of household when they really shouldn't be. So we have the authority to tell a student and parent to go do that. And then, once the student and parent goes and amends their tax return or files their tax return, and they're selected for verification, they would have to go back and still send us all those required documents. Okay, next slide. So now we're going to transition, and I believe people are asking questions in the chat, so hopefully those are being answered as we go. But if not, please, Morley or Faith, notify me, and I can answer some question if it needs to be answered to everyone. But we're going to jump into looking at financial aid award offers. So really kind of transitioning away from kind of some federal processes to, really looking at kind of on the ground, when students submit their FAFSA, when they submit their admission application, when they submit their applications for scholarships, and anything else that they need to do to apply for financial aid at a particular college or university, what really is their experience in terms of what they receive back from a college that details what financial aid they could qualify for at that college. So that's what we're going to be talking about here. Next. So as I mentioned, a financial aid award offer. So this would be the detailed layout of all the financial aid that particular student would receive at that particular college or university. It also not only should detail the financial aid that the student would be awarded there, but then also costs that a student may incur. But we all know, and I'm sure you all know, as you're working with students, the award letters really can be confusing. And there's a lot of reasons why they can be confusing. So one would be, there might be different delivery methods of that information. There could be a paper version of an award offer. There could be an email version. a version that's in the kind of the online portal that many colleges use to, kind of funnel financial aid information. And the college itself may have all three of those versions. They may have a paper version that they send in the mail. Students may receive an email with the financial aid offer in it, and then they may be able to log into their online portal and view that award offer there. And they may not all look the same, just given the the kind of limitations that may exist in like a portal, for example. You can't actually put a paper version, doesn't quite look like what you're looking at in an online portal. And so even though it's the exact same award offer in terms of numbers and everything, it may look very different. And then obviously it could differ depending on the college, university. And so similarly, many colleges and universities do not use the same layout or template for award offers. There was a push a few years ago now to kind of get more of a standardized award offer, but that it was more of a suggestion, not a mandate. And so many college universities did not take up that kind of suggestion, and so they still kind of have their own templates or layouts. And then there's language variations as well. So one college university will call a subsidized federal loan a subloan, or another college will call it a direct subloan or a federal direct subsidized loan. And so there's really no difference between any of those different loans, but they obviously have a different name that they're using, and so that can be confusing as well. Next slide. And then, award offers too may require some additional action on the student's part. And they may detail this in the award letter, or they may detail this on, one part of the award letter. So like the online portal, for example, but it may not be detailed in the paper award letter that the student receives. And what this action could be, so it could be something related to verification, or it could be, many colleges and universities will automatically accept scholarships and grants on behalf of the student, but they don't accept loans and federal work studies. So the student actually themselves needs to, either log into their portal or indicate in some way that they intend to, accept or decline their federal student loans from the FAFSA, or if they want to indicate whether or not they want to work on campus. Some colleges, the student may not need to do that. The loans are just kind of assumed. So, really, the action steps, are they clear on the award letter? Is there supplemental documents that the student needs to look at? What does the student need to do now once they have received that award offer letter? And then, I'm sorry. Oh, I thought someone had a question, sorry. So in terms of, another item that can be confusing is that, many times colleges will put out there on the award offer itself, they'll list as line items something like federal work study or a Parent Plus loan or private education loan. Not really, again, always clear in their information that federal work study is something that a student may need to apply for. That it's not a guaranteed funds that are coming, and those funds may not be applied directly to their costs, but actually are funds that they need to, or that are paid directly to the student, and then they would need to take and make a payment on their tuition. And then a Parent Plus loan or private education loan, those are loans that you need to apply for separately. And so again, the award offer may not always be clear about the additional steps needed. And then again, as I mentioned, there are costs that should be on the award letter, and these costs, could be estimated costs or they could be actual costs. And most of the time, they probably are going to be estimated because that individual student may be taking a particular class that has a fee attached to it. That individual student may have a particular program that they're in that has additional fees to it, but by the time they receive their financial aid offer, the college may not know that yet. The students may not have scheduled their classes yet, and so there could be additional costs added on that are not captured in that award offer. And then the award offer itself, mainly include direct charges, so tuition, housing, meal plan costs. Or direct and indirect charges, so things like books, transportation, personal expenses, those things that the student really is not going to be billed directly to the college university or from the college university, but they obviously are costs that the student may incur as they attend college. And I believe there might be someone with a microphone off. I'm getting some feedback. So if we just want to make sure everybody's muted.
Okay, thanks, Cody. Just a note to all the attendees, we are having some issues with the question box. So we're going to ask if you have questions to please type them in the chat box so that we can monitor them through the chat box versus the question box. So please, if you've typed something in the question box and have not received an answer, would you please retype it in the chat box and we will monitor your questions there. Thank you. And Cody, are you ready for the next slide?
We're ready for the next slide. So I know this is a little hard to see and it's a little blurry and the numbers are really small. We're actually we'll blow these up here in the next couple of slides, but this is really showing you an example of two different award offers from two different universities. These are real award offers from actual universities in the state of Ohio. You can see that the layouts are very different. So on the left-hand side, that particular college, so the kind of the more blurry side, you can see, if you can see, up at the top, there's a financial aid award, kind of in that box there, the top box. And then on the bottom box, there's the estimated cost of attendance. So first of all, you see it's called estimated cost of attendance is down below. And then the financial aid award is above. And you can see in that financial aid award, and again, we'll blow these up here in just a second. You can see really that financial aid award includes everything that a student is eligible for. So there's scholarships listed there are grants, there's work study, and there's the federal subsidized and unsubsidized loan. So everything is kind of all in one. And then you see the totals on the right-hand side of those boxes, the total financial aid award, the total estimated cost of attendance, and then down at the bottom, it says estimated remaining costs. And so really what they've done is subtracted the cost of the financial aid award from the cost of attendance. And then what's left over is that, that amount that's listed there, the $8,999. On the other side, the left-hand side of the screen, you see another university's award letter, and you can see it's a little different in that they have really three different sections of financial aid. So they have broken up their grants and scholarships all in one box. So those are aid that doesn't need to be repaid. They have the federal loan options in its own box. And then they have what they call work and credit-based loan options in another box. So there's the federal work study, and there's the private education loan and Parent Plus loan, all listed in one. And again, you can see that says, aid that needs additional action. So they're kind of calling out that, hey, the student or parent needs to do something additionally in order to receive those funds that are listed there. It also, and again, we'll blow this up, but it even says, hey, a credit check is involved with the Parent Plus loan and the private education loan. And so, you may or may not be eligible for these loans. But then you can see at the very bottom, that bottom box, really it has, so first of all, the very top line item is what will I pay this year without loans. So it's even calling out, what a student's charges would be if they only use their gift aid. And you can see then it kind of does the breakdown from there. So it has estimated tuition and fees, estimated housing and meal plan, so estimated, billed charges. So it's calling out, hey, these are just what you're billed through the university. And then it subtracts those grants and scholarships from that top box, and then that remaining balance is what is due before any loans or work study or anything else is applied. And then it subtracts the federal direct loans, and then the estimated balance due after federal loans. You'll notice that number corresponds to the line item that is listed as the optional Parent Plus or private education loan. And so what it's calling out is that, hey, if you wanted to, you could borrow a private education loan or a Parent Plus loan for that full amount and cover everything. And then you'll note a little note very small at the bottom. It says, that there are other costs that are not reflected in this amount because they're not billed directly. So something like books, and they recommend allocating an additional $2,000 to $3,000 a year for books and miscellaneous expenses. So again, two different ways to really put out there similar information, but they're obviously very different in terms of the way they're communicating that. Next slide. So I mentioned, things are being blown up a little bit. So this represents kind of a little bit easier to see the two different ways that those two colleges showed their grants and scholarships. So you can see that top, the one university, again, everything is kind of listed in one block. So you have scholarships, grants, and it's highlighting the scholarships and grants. They're listed there as a scholarship or a grant, but then obviously they're all in one combined with the federal loans and the work study. Whereas the bottom box, that university is listing all grants kind of in one box. So a student knows that these are all gift aid that doesn't have to be repaid. So essentially it's free money that the student is getting to go towards their education. The next slide. And then this is a similar kind of contrast between the way in which the federal student loans are listed in the two award letters. So again, the top one, the federal loans are listed right along with all the other different types of financial aid, whereas the bottom, the other college, has their own box specifically for federal loans. And again, they do that because by submitting a FAFSA, every student is eligible for a federal student loan. So, regardless of income, always a student will have some type of federal loan options listed in their award offer if they submitted a FAFSA. But again, it will differ depending on the college or university exactly how those loans are listed and where they're listed in the award offer. You can also see that, we talked about language earlier. You see the one college called it a federal subsidized loan. The other college called it a federal direct subsidized student loan. So again, both the same thing, but they're obviously named a little bit differently depending on the college or university. But you can also see the amounts there are the same because again, a first-year student can borrow, up to $5,500 in a federal loan. So, that shouldn't be necessarily different, although, depending on the college or university that a student is applying to in their EFC, they may qualify for a subsidized loan at one university, but then may not qualify for a subsidized loan at another because of, the overall cost of attendance at one may be higher than the other. So that's also something that can be confusing to a family or a student is that, they may, while the amounts may be the same in terms of federal loans, the breakdown of the subsidized versus unsubsidized could be different. Next slide. And then this again is a contrast between the way in which work study and then the credit-based loan options are displayed. So you can see the top college, again included work study right within the block of all financial aid, and most likely at this college, that work study is not necessarily paid directly towards the student's charges, but is something that a student earns over time that they have to then go make payments toward their charges. And then the bottom college, they also have federal work study listed there, but then they included that optional Parent Plus loan or private education loan. You notice that the top university doesn't say anything about a Parent Plus loan or private education loan. And again, that's probably partly because a student or parent they do need to do something additional to obtain that loan. They have to apply for the loan and they have to be approved for either a private loan or a Parent Plus loan. And so it's not an automatic loan. And so that might be one reason why they're not listing that there, because the student or family does need to take additional steps. But in not listing it, a student or family may not know that they can actually use those loans at that institution. So, it can be confusing listing them, but it can also be confusing not listing them because, a student may not know that, hey, I could actually use a plus loan here. I could actually use a private loan here. Those can be used really at typically any college or university. And so, or most, I should say. But even if they're not necessarily called out on the financial aid offer, but you can see the bottom, they're calling out the loans that could be available, but they are saying, hey, there is a credit check involved, and you can get more information about these loans at our website. Next slide. And then finally, it's showing the contrast between the estimated cost of attendance and then the remaining costs, because that's really what student and families are looking for, right? They're looking for, okay, after all my financial aid is applied and after I'm exploring all options, what are my final costs that I'm going to be responsible for? So again, the top university, the top one there, has the estimated cost of attendance all kind of listed together in one block. It includes both direct costs and indirect costs. You can see it has, books, transportation, personal expenses listed there. Again, it does list a couple of different fees. Those may not be inclusive of all fees that the student may encounter. And then at the bottom there, it has that estimated remaining costs as kind of one line item. You really would have to kind of do the math yourself to kind of get that amount. And then at the other college at the bottom, that block, again, it's listed where you have, right off the bat, it tells you what you would pay this year without loans. The college up top, doesn't state that. You would have to do the math yourself to do that. But then the one on the bottom then kind of gives you a breakdown in terms of, estimated tuition and fees, estimated housing and meal plan, subtracting your bill charges. You can see the one at the bottom doesn't include indirect charges, right from the get-go. It has a note about them, but that note could be, you may not see that note. And then, obviously it has the balance due after federal loans are applied, before federal loans are applied. So, again, we're not going to say one is better than the other, but what we're trying to say is that, every college or university is going to be offering this information, differently. And so, really it does, students need to make sure they're paying attention to, the breakdown of their costs. I mean, the things that really they need to pay attention to are, what are the direct costs? What indirect costs can I potentially experience? And then what financial aid options am I going to receive at this university? Depending on the layout, they may have to do their own kind of calculations, kind of get to some numbers that may be calculated for them. It may, everything may be listed there in one section. Things may be broken up into different sections. So it's just kind of paying attention to kind of everything that would be contained in that award offer, and making sure you have some idea of what again that bottom line cost would be. A tool that can kind of help you to do that, if you go to the next slide, would really be this cost comparison worksheet. And so, we have this at the OASFA website. It's a way for a student or parent to, go in and actually look at that financial aid offer, find those kind of line items that are listed there, and kind of, put them all into this worksheet. And hopefully that might be a little bit easier way to compare and contrast, depending on what a student is being offered. And again, a student may not be offered everything at every university, but at least this is a nice way to kind of maybe see it all a little bit more in a way in which you're able to more easily make that comparison. So that's out there. Just the website is listed there. Just know that can be there to assist. And some colleges themselves may even offer something like this as well. So the thing is, just make sure you're, if you have questions about that award offer once you receive them, you make sure you're following up with that college or university to ask those questions and get the information that you need. All right, next slide. I think that ends my section. So I'm going to turn it over now to Faith.
Thanks, Cody. Wow. Is anybody a little bit overwhelmed with all of that information so far? One of the main reasons we do these workshops is to reinforce for you that you are not required to be the expert in financial aid. And those of us, and Cody Morley and I have all been doing this for a really long time, we still don't feel like we're the experts in financial aid. It's evolving, it's complicated. And so our whole intent of these workshops is to just give you the tools to get your students started, to notice when things may not look right or have questions, and then refer them to the financial aid office. So don't feel like we're expecting you to be the experts. Those overwhelming award notifications, you must see them every single day where students are bringing in 5 different award letters from 5 different schools that look completely different. So please know that that's what we're here. OASFA, financial aid administrators, we're here to support you through this process. So we are going to switch gears a little bit to special circumstances. And if there was ever a time when special circumstances will be important, it is this year. And we will talk about it. I've already seen a question in the chat about as a result of the pandemic, what does that look like? Next slide. So let's just talk basic eligibility for financial aid. We'll get there. Hold on. There we go. So eligibility for financial aid for the 21-20 year, so this is the FAFSA that just opened up on October 1st, will be based on 2019 tax information, as Cody's already explained. So students will file the FAFSA now. They will report theirs and their parents' 2019 taxable and untaxable income. But prior to pandemic, we have always recognized that special circumstances do exist that aren't always captured on the submission of the FAFSA form. And so the Department of Ed has given financial aid administrators the authority to evaluate special circumstances of students on a case-by-case basis with adequate documentation to better reflect what the students' and families' financial picture looks like. So these special circumstances are conditions that exist that cannot be explained on the FAFSA form. And our primary examples that we do see in the financial aid offices are loss or reduction of employment and wages, loss of untaxed income and benefits such as child support, or a separation, divorce, or death that has occurred after the FAFSA has been submitted. And so it's not fair to expect a family to be based and captured right on that FAFSA as it was submitted at that point in time. Next slide, please. So before a family can present their special circumstances to the college, they have to submit the FAFSA as it directs using their 2019 taxable and non-taxable income. So if families are already coming to you to say, gosh, I've looked at this FAFSA and it's asking for my 19 income, and then the pandemic hit and 2020 just isn't going to look anywhere near 2019, have them do the FAFSA exactly as it directs, reporting their 2019 income. Most colleges have an appeal process that we use to address these special circumstances. The student should complete the appropriate appeal form, which will likely include an explanation of the change of circumstances, documentation to support their circumstances, such as a layoff or a termination letter, and then they will be asked to give tax returns or W-2s or pay stubs or any other source that will document their earned income or anticipated income. Now, I will tell you that most colleges aren't ready to look at these special circumstances yet. Our appeal forms aren't even out on our website yet for 21-22. We're still like right in the middle of just really getting focused on the current award year. So tell families to be patient, that they're going to be submitting these FAFSAs in October, November, and December. And they may call the school's financial aid office to ask about an appeal form, and they may be asked to come back and visit us in November, December, January, or even February to do the appeal process. And that's okay. They don't need to panic about the fact that it will take a little bit of time to get those appeal forms ready. But they can be monitoring the school's websites. Most of us will put them on our websites under a title that probably says appeals, and they're looking for something that either says special circumstances, income appeal, or EFC appeal. But the whole goal is to have families give us an estimate of their future or current income. And then the financial aid office will look at their 19 income and their 2020 income or anticipated for the year and determine if indeed 2020 does demonstrate less income. Then the financial aid administrators will go back into the FAFSA and they'll make adjustments to those income fields, and they flag it to the Department of Ed to say, hey, we've overridden what was already reported. So a family cannot go in themselves and put their 2020 income in after they've done the FAFSA. Only the college can do this override and change the student's information. And the whole goal is to reduce that expected family contribution to hopefully increase the student's eligibility for more financial aid. So the college will review, determine if the change impacts it, and then they make the updates to the FAFSA if they feel appropriate. Next slide, please. we know that students are looking at more than one college at this time of the year. And so they're submitting the FAFSA to say, 3 to 5 different colleges. If they are going to do an appeal, they will have to appeal at every single college separately. And so they may pull down 5 different appeal forms from 5 different financial aid websites, and they will look slightly different. Most of us are very similar in the process, but they need to anticipate that one school may ask for additional documentation, one school may be easier than the other school to do the appeal form. So they need to be prepared to appeal in each school that they are interested in receiving a financial aid offer from. The appeal decisions are at the discretion of the financial aid administrator. So if the administrator chooses not to accept the appeal, or they don't even have to do appeals, we're not required to do them. So if the financial aid office has made a decision, it is final, and the family cannot appeal it to the U.S. Department of Education. That decision is made at the financial aid school level. If the student has been selected for verification, as Cody's already explained, when their FAFSA comes to us, we are required to follow through with that 2019 verification documents. Even though they're in the process of doing an income appeal, they need to be prepared. So we have to go back and first make sure that they actually filed the FAFSA correctly with the 2019 income before we can look at an appeal. And if a student wasn't selected for verification prior to submitting an appeal, some colleges will go ahead and select them, and it's in the appeal form. So at Ohio State, for example, if the student wasn't selected for verification, but they do an appeal form, our appeal, the first thing they need to do is complete verification of the current tax year information on the FAFSA form. So they need to be prepared. There's a lot of documentation that goes into this appeal form, but we don't want to sway them from doing it because it could have a huge impact in how much aid they could be eligible to receive. So again, due to the COVID-19 pandemic, we are preparing for the fact that we are going to see a lot more appeal forms going into the 21-22 school year. We recognize it. The Department of Ed has been encouraging schools to be prepared, to know how to communicate with families that this is an option for them. So it's important that you as counselors know, as you're working with your families, and if they're expressing to you, gosh, I didn't get any financial aid or not much financial aid because they're looking at 19 income, please remember to tell them that the colleges have the authority to look at their special circumstance. And again, we do anticipate that we will receive a lot more of these because of the pandemic. Next slide, please. I think I've already pretty much covered this, that even though the FAFSA is available now, financial aid offices may not be prepared to discuss the appeal forms until later in the year or the early part of 2021. And the different titles that you may see, expected family contribution appeal, an income appeal, or special circumstance appeal. There is a free resource that we have seen. It's the website is here on the presentation, formswift.com. Swift-student, and it is a great resource that explains different types of special circumstance appeals and how to write those letters for those appeal forms. So we wanted to provide that to you as a resource. Next slide, please. So this is just an example of some of the special circumstances, and we wanted to point out, we talk a lot about the loss of income and employment. That is the most common one we see. Also, loss of child support. So a family that files a FAFSA right now will report if they received child support in 2019. But we recognize that when a student turns 18 or graduates from high school, that child support typically ends. And so that is something, even if they didn't experience a 2020 loss of income, if they are experiencing a loss of child support, that is something that is also worth documenting and appealing to see if that changes the family's outcome for financial aid. Divorce, death, and separation that occurs after the FAFSA has been filed. So, the student may start the award year fine, next autumn, everything's going great, and then something happens in the family, the parents separate. the student going into spring semester could approach the financial aid office and say, we've just experienced a change in special circumstance. So that special circumstance doesn't have to start at the beginning of the award year or at the beginning of the financial aid process. That special circumstance can occur right smack in the middle of the award year. And all the student has to do is reach out to their financial aid office and say, this is what's happening in my house, and that's impacting our ability to pay. And the financial aid office can take a review of that. Another one is extraordinary dependent care expenses. So if a family is paying, for example, they have a disabled child that they pay expenses for, that is something else that they could appeal. And another one is uncovered medical and dental expenses. So we will see this where a family is dealing with a serious illness throughout the year. And while they have insurance, we all know that insurance doesn't always cover 100%. And we will see families that are putting out $5,000 to $10,000 of their own income toward medical expenses. And so that is another appealable item where the family could document in 2019 or in 2020, out of my own pocket, I paid $5,000. And if it warrants it, the financial aid administrator could, for example, reduce the adjusted gross income to reflect that unusual expense that the family has experienced. So we talk about those again, just so that you don't get caught up on just loss of income and employment is the only option for appealing. There are other unusual circumstances, and they're not all captured here. So again, if a family is presenting to you that we're struggling financially and our circumstances aren't captured on the FAFSA form, have them reach out to a financial aid administrator and see if there is a way that we can do an appeal and appropriately reflect their income. Okay, next slide.
Faith, we're going to take a pause here. We've had a question. We're going to go back a slide because some folks are interested in copying down the web address for FormSwift. So we'll pause here for a minute so that those of you that are interested in jotting down this website address, also if you just Google FormSwift, it will come up. But we're going to give you a moment to get this web address copied down, and then we will move ahead. Okay, here we go.
All right. So we are now going to transition into the different type of financial aid programs, and I'm going to cover the federal aid programs. Next slide. And the main programs are the federal Pell Grant, the Teach Grant, campus-based programs, and direct loans. And we'll break down each one of those programs individually. Next slide. So the federal Pell Grant is obviously the big one. That's the one that everyone wants to be eligible for. The maximum award increased slightly for the current award year to $6,345 for full-time enrollment if the family has an expected family contribution of 0. The maximum EFC for Pell eligibility increased to $5,711 for 2021, and it has not yet been established yet for the 21-22. Each year we anticipate a small increase. I'm not sure with all of the different circumstances with the pandemic what the 21-22 EFC will look like, or Pell eligibility. Next slide, please. So again, we're going to get into a great amount of detail that we don't expect you to explain to students, but we want you to just be aware of it, because when you have certain circumstances come up with students, it helps to have this knowledge. And so this next one is students have a maximum number of terms that they can actually receive their Pell Grant, and it's 600% of their annual award, or basically the equivalent of 12 full-time semesters. So if a student never goes part-time, they attend full-time all the way through and they receive Pell Grant. Once they hit that 12th full-time semester, they've maxed out in their federal Pell eligibility. And even if they're still working on their undergrad degree, they would no longer be eligible for the federal Pell Grant. And so we want to encourage students, and we know they start off oftentimes with, this is the degree I'm going to major in, and I'm never going to change my mind, and yet they do. And so we know that they change majors. We know they may take classes that they thought they needed for one major, but now they don't need it for the new major, and now they have more time that they will be in school. It is important that students just make their best academic decisions on programs of study and whether or not to drop or withdraw from classes. Because the more often you receive the Pell and drop and don't complete those courses, you're utilizing that Pell eligibility up. And we don't want students to max that out and not be able to finish their degree or have to struggle to pay for their degree out of pocket because they lose that Pell eligibility. So we want students that are making wise academic decisions. The year-round Pell still is in existence. So for students that can attend year-round, which typically means adding a summer semester of eligibility in there, it used to be that if you went full-time, say fall and full-time summer, and then you wanted to take a couple classes in full-time fall, full-time spring, and you wanted to take a couple classes in the summer, you'd already used up all of your Pell eligibility and you didn't have any left for summer. Well, this is now expanded to where they can now receive 150% of their annual award if they attend an additional term. Now that does count against that 60% of their lifetime eligibility, but it does allow a student to pick up some classes in an off term, and if they're eligible for Pell, to use a portion of their Pell toward that. So it serves as an incentive to get students to complete that credential or degree a little bit faster. So they still have that 12 full-time semester limit then for receiving their Pell. Next slide, please. So Teach Grant is a tricky thing. It's called a grant, and it starts off as a grant, and it is awarded to students that intend to teach in public or private elementary or secondary schools that serve low-income students. So student starts off as an education major and tells the college's financial aid office that they intend to work in a low-income school district. They will receive this grant up to $37.72 per year, and they can receive it, all 4 years that they're pursuing that degree. However, if they don't follow through upon graduation and teach in a low-income district, that grant will be converted to an unsubsidized direct loan that must be repaid, and that interest will have accrued from the time the student had been receiving the grant. So it is great in concept, and we do have students that utilize this, but they have to understand the commitment to the word grant versus the fact that it could transition into that direct loan that they have to repay upon and a repayment upon in graduation if they don't comply with that requirement. Next slide, please. So then there are what we call campus-based programs, the Federal Supplemental Education Opportunity Grant, or SEOG, or the Federal Work Study. These are called campus-based funds because these are small pots of money that are allocated to each college and university that opt into participating in these programs. And the funds are allocated to the school, and once they've spent their allocation for the year, then there isn't any more money available for that year. So these are usually, the amounts that are awarded can vary from college to college, the annual awards. And this is one of those, the priority dates that schools set that we want your FAFSA submitted to us by. These are two of the funds that are driven oftentimes by those priority deadlines. So students who say yes to wanting to use work study on their FAFSA form and meet a school's financial aid priority deadline and meet the eligibility criteria could be awarded the work study, for example. But if you don't meet our priority date, even though you said yes, you may not be awarded work study and SEOG. So the supplemental grant, SEOG, is a high need grant, and in most cases the student has to be Pell eligible, and in many cases they have to have a 0 EFC. And schools receive small amounts of this money, so they typically, even though $4,000 is the maximum we could award, we typically make much smaller awards so that we can spread the wealth among our needy students. All right, next slide, please. So let's talk a little bit more in depth about work study. So unlike most of the other federal grants, such as the Pell Grant and the SEOG, which you can only receive if you are an undergraduate student, once you acquire your first bachelor's degree, you are no longer eligible for Pell or SEOG, even if you still have lifetime eligibility left for Pell. But federal work study can be awarded to an undergraduate or a graduate student. And in most cases, the school won't offer it to them if they don't say yes to the question on the FAFSA form. That is how we control the interest in the federal work-study program. Employment can be on or off campus. So the benefit to the on-campus job, for example, is a student could go to class and attend class for a couple hours and then walk over to their work-study job and work for a couple hours and go to their next class and then go home and study. And we also tell students one of the other benefits to working on campus is your supervisors are typically more in tune to being a student first versus an employee first. So I often tell students, if you're working at McDonald's, they may not be as flexible with your work schedule as a supervisor of a work-study job, for example. So definitely benefits to using the work study and the student employment options. But there are also off-campus options depending on the college. So many colleges have what we call community service opportunities, where they are putting students out in schools, for example, where they're earning their federal work study wages, but they're serving an outside agency. YMCA is another example. And we like these options both on and off campus because they could give students real practical work experience that they can put on their resume when they graduate from college. And there's absolutely nothing wrong with working at McDonald's or Burger King. I absolutely did my time in fast food service, but it's not as positive on your resume as if you said you worked in the financial aid office while you were a student at your college, or you worked in the human resources office. So it gives students practical experience that they can put on their resume upon graduation. Benefit of working in the federal work study program is it is considered financial aid. So when the student has earned money for a tax year that is reported then on the FAFSA form, they get to exclude it from the EFC calculation. So it takes a couple years to catch up with them because the tax year that we use on the FAFSA is 2 years behind. It's a prior year. But eventually, the wages that they earn as a freshman in 2 years will get excluded from their EFC calculation. So we don't want it to count against them in that FAFSA calculation. The federal work study positions are to be at least at minimum wage, which right now is at $8.70 per hour for Ohio. Many jobs, depending on how technical they are, can pay more than that. So on my campus, we have our tutors that we pay more than that because we require them to have some pretty darn good skills in order to be a tutor to other students. So student should at least start out by making $8.70 an hour, but certainly depending on the job, could make more money. The work study, it is important for students to understand, and if you go back to some of the examples that Cody talked about on award offers, work study will show up on a financial aid offer, but students need to understand that in most cases it does not apply directly to their statement of account or their tuition bill. So we often have students say, well, where's my work study? Why isn't it deducted from my bill? Well, work study is money that a student earns usually on the college's pay schedule. So every 2 weeks, for example, they actually get a paycheck that they then use that money for their educational expenses, whether it be toward their books or toward their bill or for their food and their other living expenses. So also there is a difference between work study and work or employment on an award offer letter. So while this is rare, some schools may arbitrarily put work award on that award offer. And so the difference between work study and work or summer job, those are two different things. Some schools are putting, summer income of $2,000 on the award offer to just be suggesting that the student get a job to help pay toward their expenses. Again, this is rare, but it's important to know the difference between, and it should have the word federal in front of it on the award offer, federal work study versus work or a summer job. Next slide, please. So again, I talked a little bit about the federal SEOG. It goes to undergraduate students with exceptional need. It has to go to Pell eligible students with the lowest EFC. And in many cases at schools, rarely do we get above that 0 EFC for the SEOG. And the award can range from 100 to 4,000. But again, most schools won't go with I don't think I've ever seen a school use a $4,000 award for the year for SEOG, simply because we want it to benefit as many students as possible. Next slide, please. So Cody already covered all the different ways, and probably there are other ways that we didn't even discuss, that you may see a federal student loan referenced on an award offer. But they are direct loans. They are directly borrowed from the federal government. Years and years ago, students who chose to borrow a federal student loan got to choose a bank that they went through. But we are now in what we call the direct loan program, where all the funds are coming directly from the federal government. And those loans can be subsidized and unsubsidized. They are two very separate types of student loans that are awarded separately. They should be denoted on the student's award offer clearly and separately, the sub versus the unsub loan. And on the subsidized loan, the student has to demonstrate financial need in order to be eligible for that loan. And if they are eligible for the subsidized loan, the main difference between the two is on the sub loan, interest is paid for the student while they're in school, as long as they are enrolled at least half-time, which is typically 6 hours or more. Once a student drops below 6 hours or ceases to be enrolled, the interest starts accruing on that subsidized loan. And the interest rate is fixed right now at 2.75% for our students that are borrowing for the 2021 year. So that loan that they borrowed this year at 2.75%, that rate will never change. Now, next year when they borrow for 21-22, that loan may have a different rate. It changes every July 1st based on the Treasury bill. So the student may have 5 years or 4 years worth of subsidized loan eligibility, and each loan will have a fixed interest rate that may be different from the prior year. It will never be more than 8.25% on that, on the interest on that loan. Then the unsubsidized loan is not based on financial need. And this is where I want you all to help your families understand that regardless of family's income, every student who files a FAFSA is going to be considered for a student loan. So even if parents made $1 million and they file the FAFSA and they report that they made $1 million on the FAFSA form, that student will still be offered an unsubsidized student loan and not need-based loan. Interest rate is the same for the unsub loan. The difference is that the interest starts accruing on that loan as it is dispersed to the school. So as you see on most financial aid offers, we divide the financial aid up usually between two terms, autumn and spring semester. So as soon as the autumn unsubsidized loan is dispersed to the college, interest, that 2.75% interest starts to accrue on just that disbursement, not the full amount of the loan that the student asked for. Then when the spring disbursement is dispersed to the school, that is when the interest starts to accrue on that loan. On both the sub and the unsub loan, the student does not have to pay on any principal or interest while they're in school, or 6 months after they graduate or cease to be enrolled at least half time. So it gives the student time to get on their feet and get a job before they have to enter repayment on these student loans. As soon as the student drops below half time or graduates, they will enter repayment. They will enter into that 6-month grace period on those student loans. Also important to note that each of these types of loans have what we call an origination fee. So while the student will see a gross amount offered to them on their financial aid offer of $5,500, for example, the federal government does deduct a small percentage of that money for processing before they send the money to the school. So even though the autumn semester disbursement, for example, shows as $2,750, it will probably only disperse at about $2,740, for example. It's about a 2% or less amount of origination fee that is taken off of the top of each disbursement before it is released to the school. Next slide, please. So this slide shows you the maximum amount per year that a student can borrow by their grade level. So you can see freshman level is $5,500, sophomore level $65, and then it goes up junior and senior year to $7,500. And the main reason for that is the longer the student is in school, the more likely they are to graduate and have the ability to repay the student loan. So that is why it increases a little bit each year based on their increase in grade level. So depending on the student's need, the maximum amount of sub any student can receive their freshman year is $3,500. Even though they're eligible for $5,500, only $3,500 of that can be subsidized, where that interest is paid for them while they're in school. And then $2,000 of that is unsubsidized loan. And usually students will have the option, not usually, they have the option to tell a school, I only want my sub loan, I don't want my unsub loan. We tell students, don't accept the loans if you don't need them, but that loan offer stays out there for them all year. So if they decide going into spring semester that they need additional money, they could always come back and ask for that loan. So we don't want students to borrow if they don't have to, but this money is out there and offered to them. And then again, each year it increases in the amount in which they can borrow. If they are defined as an independent student on the FAFSA form, meaning they don't provide parental information, or a dependent student's parent applied for a parent loan and it was denied, that student is eligible for an additional $4,000 in unsubsidized loan as a freshman and a sophomore, and then another $5,000 as a junior or a senior. So it's on top of the $5,500 as a freshman. If a freshman dependent student's parent applies for a parent loan and it is denied, that student could add another $4,000 in loan eligibility to their financial aid package, taking their available amount from $5,500 to $9,500 for the year. Making sure I covered everything. There are aggregate limits, so very similar to the Pell Grant. There's a lifetime limit for Pell, and there is a lifetime limit, what we call an aggregate loan limit, for student loans. So undergraduates that are dependent, the maximum aggregate limit that they can borrow for their undergraduate degree is $31,000. So again, going back to what I talked about with the Pell Grant, we want students to make really careful enrollment decisions because we don't want them to max out in their financial aid eligibility. Okay, next slide, please. Talk quickly about graduate students. You don't work with them that often, but graduate students are only eligible for an unsubsidized loan. So even if they have a 0 EFC and high need, if they borrow a student loan, it is 100% unsubsidized, meaning that interest will accrue while they are in school. Okay, let's go on to the next slide so we can make sure we can get through everything. Okay, and we're not going to go into great detail. We could do an entire 45-minute presentation on just repayment plans for student loans, but we want you to be able to assure students that have to borrow that the federal government is here to work with them in their repayment process. And so when a student enters repayment, they currently have 4 different types of repayment plans that they can elect into. They can do an income contingent repayment plan, income-based repayment plan, a pay-as-you-earn, and a revised pay-as-you-earn. These plans are designed to give students a peace of mind related to their ability to pay. And so if a student gets a great job right out of college, they're probably just going to want to stick with the standard repayment terms and get that loan paid off as quickly as they possibly can. But if they're starting off, say they're a teacher and they're starting off in a low income school district, so they're not making a lot of money, they may want to select an income contingent repayment plan that's based on their income or a pay as you earn. So again, we're not going to discuss all of these different types of repayment plans, but just reinforce for families that are, very worried about borrowing that it is an investment in their future and that there are repayment plan benefits And if a student is ever struggling to repay a student loan, especially right now during the pandemic, I can guarantee you that students are asking to forbear their payments because they've lost income. So it's not like your Discover card where a payment's due and a payment's due and the amount that's due is due. You can work, the student can work with the federal loans to defer and forbear as needed. We don't want students to default on these loans. All right, next slide, please. Then there's the public service loan forgiveness. So under this program, a borrower can have the remaining balance of their direct loan forgiven after they've made 120 qualifying payments, so 10 years worth. And so if they are full-time in certain public service jobs or any nonprofit employer, they can apply for this public service loan forgiveness. This you may be hearing in the news quite a bit. This is a big topic of conversation on whether or not public service loan forgiveness should be kept around or not. Right now, it remains offered and unchanged for the 2021 award year. Next slide, please. All right, and the last federal program I'm going to talk about is the Federal Parent Plus loan. And this is a loan that is offered to parents of dependent students. The amount they can borrow is dependent upon that cost of attendance minus any other aid they've already received. So if the student's cost of attendance is $20,000 and they've been offered $10,000 in all other financial aid, that parent could borrow up to $10,000 for that year to help pay for all of those other expenses that are not covered by the student's already offered financial aid. The interest rate is a fixed rate. It is currently 5.3%. The origination fee is also taken out of the parent loan. Right now it is at, I believe, around 4%. So it's a little bit higher than on the student's loan. And let me just stress that on the sub and unsub loan, that is a loan that is in the student's name only, and the parent never becomes responsible for that loan. So even if the student chooses not to make a payment on that loan, the only thing they will do is go back to the parent if they were listed as a reference to say, hey, do you know where Johnny is? We're trying to help him get his loan repaid. Parents never become responsible for that. Same thing with the parent loan. It's a parent loan that's in the parent's name only. And even if that parent doesn't repay that loan, even though it was based on the student's education, the student never becomes responsible for that student loan. Repayment begins within 60 days of the full disbursement of the loan. So an autumn disbursement is distributed, a spring disbursement is distributed, then the parent would enter repayment on that loan. And interest is accruing with each disbursement. Now, parents do have the option to defer payment while the student is in school, and if they would like, during a 6-month grace period. So there are families that will defer that. And on either type of loan, the unsub loan or the parent loan, the student or the parent can pay the interest while the student's in school. If they want to reduce the amount that they will end up paying back later on, there is no penalty for prepayment or making payments on the interest rate. All right, next slide, and I'm going to turn it back over to Cody to talk about state grants.
Thank you, Faith. So yeah, we are going to cover some state aid program updates. Just to note that, many of these programs are going to be found at the Ohio Department of Higher Education's website with information about the application process, who's eligible, amounts of things like that. Again, this is not information that we expect you to, retain and know right offhand, but we just want to make sure you're aware of all of these different opportunities that exist for students within the state of Ohio. Next slide, please. So the need-based grant in the state of Ohio is called the Ohio College Opportunity Grant, or OCOG. As you can probably tell from the presentation, many financial aid administrators will use acronyms. So OCOG is the Ohio College Opportunity Grant. The acronym might be listed on a student's financial aid offer. So again, that is one of the reasons why the financial aid offers can be confusing. So I'll try to refer to it as the Ohio College Opportunity Grant, but if I do say OCOG, that's what I'm talking about. So to be eligible for that grant, a student needs to file the FAFSA and be a resident of Ohio. And then it is restricted to particular types of institutions. So they have to attend an Ohio Public University's main campus, so emphasis on main campus, or an Ohio private not-for-profit college or university, or an Ohio private for-profit institution. Next slide, please. The Ohio College Opportunity Grant is awarded based on the expected family contribution that EFC, the FAFSA, produces. The range to be eligible for the Ohio College Opportunity Grant is 0 EFC to 2190. But there's also a maximum household income of $96,000 that the student and family has to have in order to qualify. So if they have one without the other, they would not qualify. They need to have both. And again, it's really an automatic process. When a student files the FAFSA, if they meet that criteria, they are an Ohio resident, they're attending an Ohio institution where Ohio College Opportunity Grant is capable of being awarded, they would be awarded that grant. A part-time student can receive the Ohio College Opportunity Grant in a prorated fashion. And then like many of the other aid opportunities that Faith talked about, there are some limits in terms of the number of semesters that students can receive the Ohio College Opportunity Grant, 10 semesters or 15 quarters. But just to note that students actually can receive the grant over the summer. So if they do take a third term, they can receive the grant during that time. However, often, so the Ohio College Opportunity Grant can only be used in most cases towards tuition. And so because student and families are going to be eligible for the federal Pell Grant that can also be used on a year-round basis, there are times when they may not qualify for the Ohio College Opportunity Grant because during the summer, because that Pell Grant is going to take care of all of their tuition costs. So just keep that in mind, but it is available on a year-round basis. Next slide, please. You can see the chart here that details the award amounts for the Ohio College Opportunity Grant based on the institution. And again, this is 2021 award amounts. We should receive information on what 21-22 amounts will be here this spring. But you can see the community colleges and regional campuses of public institutions have zero listed. These zeros listed there, and that's because community colleges tuition, regional campuses tuition, typically is on the lower side compared to other types of institutions. And because again, students that qualify for the Ohio College Opportunity Grant are also qualifying for the federal Pell Grant. A federal Pell Grant, and essentially combined with students' loans, should cover all of their tuition expenses. And so that's why, students at those types of institutions aren't eligible for the Ohio College Opportunity Grant because they typically are going to have their tuition costs already covered. But then, of course, we know that main campuses and then obviously private nonprofit and for-profit institutions, have higher costs than the amount of the Pell Grant. And so that's where, the Ohio College Opportunity Grant can come in and kind of help offset those additional costs. So at other, main public university campuses, a full-time student would receive $2,000. If a student attends a private nonprofit institution, they receive $3,500. And again, the amount is higher because a private nonprofit tuition is going to be higher than a public main campus. And then a private for-profit institution, students could receive $1,300 as a full-time student. And you could see the breakdown if they were three-quarters time, half time, or a quarter time there as well. And then students actually can receive the Ohio College Opportunity Grant if they attend a Pennsylvania institution. We have a reciprocity agreement with Pennsylvania where students from Ohio can attend a Pennsylvania institution and still receive the Ohio College Opportunity Grant. And then likewise, students from Pennsylvania can come and attend an Ohio college or university and receive their version of their grant. So just to note that students actually can receive the grant if they go outside of Ohio, but just for Pennsylvania. And you can see the amounts there are much smaller, but again, it's still additional funding that a student could receive. Next slide. Just to note that, as I mentioned, most students at community colleges are not going to be eligible for the Ohio College Opportunity Grant. However, there is an exception to that if they are qualified foster youth who are enrolled at community colleges. They actually are allowed to use their Ohio College Opportunity Grant funds towards living expenses. So as I mentioned, most of the time that grant has to be applied towards tuition, and exception is made for foster youth at community colleges. So students at community colleges, if they're in the foster care program, can receive the Ohio College Opportunity Grant, and that can help with some of their living expenses. You should see that the maximum of the OCOG amount, again, that's what they could be eligible for, would be the $2,000 that they could receive. Next slide. So the Nurse Education Assistance Loan Program. So this is a loan program for students in the state of Ohio if they're enrolled in as RN candidates or as graduate nurse faculty students. There is a provision in the loan where they, if they serve as a full-time nurse in Ohio for 5 years, they can qualify for 100% loan cancellation. If they do not end up doing that, then that is a loan that you do need to repay. You can see the annual awards there for the current academic year. So $1,620 for those who are RN candidates, and then $6,000 a year for those who are in Masters of Nurse Education programs. So again, this is a loan that does need to be repaid. However, if they do complete the service requirements, they can get that loan canceled, and essentially becomes free money again applied to the students' expenses. Next slide, please. The Ohio War Orphan and Severely Disabled Veterans Scholarship. So this is a program for children of deceased or severely disabled Ohio veterans who served in the armed forces during a period of declared war or conflict. Again, more information about all of these aid programs at the Ohio Department of Higher Education, the Ohio Department of Higher Education's website. But you can see for students attending a public institution, they have 100% of tuition and general fees will be covered by the Ohio War Orphan and Severely Disabled Veterans Scholarship. Those who are attending private institutions can receive an annual award of $8,575. Next slide, please. The Ohio National Guard Scholarship. So this is obviously for students who are involved in the Ohio National Guard. This is, again, 100% of tuition and fees can be covered at public colleges and universities. And then for those who are attending private or proprietary degree granting institutions, the program will pay $11,016 per year. Next slide, please. The Safety Officer Memorial Scholarship. So this is for Ohio students who are dependents or spouses of safety officers who are killed in the line of duty. Again, the current award for those attending a public college university is 100% of tuition and general fees. And then the current award for those who are at private college universities, both nonprofit and for-profit, is $8,451. Next slide. The Choose Ohio First program. So this program really was instituted to help to keep students who are interested in STEM concentrations in Ohio. So the idea is you should choose Ohio STEM related institutions first. And so these individual awards, can vary depending on the college or university that the student is attending. There is a partnership that can happen between a private and a public university. For example, a public community college and a private four-year institution can go together. There is a great website that will list more information about the award. I actually just checked it out last night and have a really interesting video about different projects students are doing as a part of this program. But it isn't available for every single college university in Ohio. So you definitely would want to make sure you are asking if that award is available. But many times it will be awarded again automatically to a student depending on the funding the college has if they are in one of those STEM concentrations. Next slide. And then last but certainly not least in the for the school or the state of Ohio would be the Ohio Education and Training Voucher Program. So this program is for students who again are in foster youth. They can actually receive up to $5,000 a year in qualified school related expenses. There is an application and the website is there. They do have to meet the criteria listed there. So they have to be in foster care, on their 18th birthday or aged out at that time, was in foster care, legal custody, or guardianship to a kinship caregiver or after 16 years of age, adopted from foster care with the adoption finalized after their 16th birthday, or have a foster care case closed between the ages of 18 and 21. So if you're working with students who would meet that criteria, definitely have them go to that website and apply because they could receive up to $5,000 a year through this program. Next slide. And now I'm going to turn it over to Maura Lee, and she's going to walk through some different resources that are available to counselors and college access professionals regarding financial aid.
Great, thank you, Cody. Just a reminder that if you have questions, please get those typed in the question/chat box so that we can address those. We've been trying to answer questions that were submitted throughout the presentation, but if you still have a question about anything you heard today in the presentation or general financial aid questions, please feel free to get those typed in, and we will address those as soon as we finish the resource portion of the presentation here. I think more than ever this year, online resources are going to be completely critical, not only for you, but for your parents and students. So what we have here is a screenshot of the OASPA website, and that is oaspa.org, so easy to find. So this is a sample of a page about helping complete the FAFSA, but the tabs across the top under resources, that's where we're going to find a lot of things that are designed for you as the counselors, and then also for parents and students. And then under FAFSA Help Ohio, OASPA again is using this as a calendar to promote, you know, FAFSA workshops, and then also resources for students and parents. You can also still continue to get resources from the federal government, so we encourage you to use the studentaid.ed.gov resources link. They produce lots of publications. You can no longer order things to be printed, but you can go into the resources page and identify certain resources that you may be interested in, and you can download them and use them all and print them and or post them on your websites once you've downloaded them, etc. So there are still many great resources available from the federal government related to the financial aid process and the FAFSA in particular. We will remind you to please share the words with your colleagues. We thank you for joining us today on our first counselor workshop, but you can see that we have 4 remaining, the next one coming up on October 20th. So if you had colleagues today who were not able to join, please send them to the oaspa.org website and under the resources page for the counselors, and they will be able to click on those links and register for future webinars. So please share the good word with your colleagues. We have been filling requests. You know, it is a very unusual year in terms of doing financial aid nights or financial aid information nights, but if you are doing one of those for your families, or you think about doing one in the spring for your juniors, you can go on the OASPA website and request a financial aid night presenter. There's a form there that you'll complete. This year we are asking if your workshop is an in-person or a virtual one, because our folks are willing to do virtual presentations. So we feel like most high schools probably have access now to things like Zoom or something like that, where you can set up a workshop, share the link with your presenter once we identify them, and with your parents and students. And so we can, you know, come in a sense, come virtually and do your financial aid night presentation. So if you are still going to host events like that, excuse me, please fill out the form and we will respond to that and see if we can identify a presenter for you. The other thing that we're going to strongly encourage you to do at the oaspa.org, if you're not already in there, we want you to go and put yourself in the student counselor database that we have there. So you can be a school counselor, college access advisor, whoever, so that when we want to send announcements out about things like the workshops or any updated resources or anything that's critical like that, if we have you in the database, it will be easy for us to communicate directly to you. So please go there and put yourself in the database if you are not there now. Thank you for coming today. We do want to remind you that on the FAFSA Help page, and I'm going to jump back there quickly under FAFSA Help Ohio, we are using and putting up again the calendar this year for FAFSA completion events. So if you click on the FAFSA Help Ohio tab for the calendar events, there's a form you can complete to let us know if you are hosting a FAFSA completion event. We strongly encourage you to do those. We started to post those this week as they've started to come in from high schools and various colleges. So far, all the ones we received, again, are going to be virtual workshops, which does not surprise us this year. So that's an option to let us know on the form. Also, if it's virtual and there's a registration link, we will ask you to include that so that we can, respond and get your event posted up on our calendar. As many people, watch this calendar, they will be noted by the month that the event is being held and also be tagged by your county so that if somebody is looking for something in the general area. So again, we're going to thank you for coming today. We're going to take a look at questions and see if there's things that we can answer. So Cody and Faith, if you want to unmute and we'll take a stab at these questions. So the first one we have is, what do we do if on the website that lists student info for FAFSA, if it does not have all of our students, where do we get this corrected? And that's referring, I'll take a stab at this one, that's referring to the website, the Ohio FAFSA Help, where you can see. There are some times where you will not find student matches. So if a student comes in and is holding their student aid report in their hand, which is evidence to you that they have filed their FAFSA, but you do not see their name on the list, it can do with certain data elements. For example, how the student's name is listed in your school records and the actual name that's on their social security card, which is the name that they have to put on their FAFSA, sometimes won't match. If the student checked the box indicating they were something other than a first year never attended student, then they may not come out on your list. The good news is if they're holding the student aid report in their hand, you absolutely know they've completed the FAFSA and can add them to the list. We know the state list is not always perfect, but a lot of times it's due to different data elements depending on how the student put in their name or their birthday, and if the birthday doesn't match what you have on school records, etc. So the next one I'm going to let Cody or Faith answer. If a parent has a 529 plan, it is posted under investments, but once they use it for the student, does it show up the second year anyway?
I can take that one. So whatever they have on the date they submit the FAFSA form, they list the value of all 529 plans. And then next year when they reapply, if that 529 plan has been exhausted, then the answer would be 0. So the 529 plan never shows up as a financial aid resource or anywhere on the student's financial aid offer. It is considered an investment. So the next time they file, if it's exhausted or reduced, that's the amount that they would report on next year's FAFSA form.
Okay. Next question. Who is responsible for year 2 determination for homeless unaccompanied youth? Can the high school liaison still make that determination?
So from my understanding is if they are still in contact with that high school liaison, we find that's very rare. So in my experience with the ones I've dealt with at COTC, after the first year, the student does not have a contact with the high school liaison, homeless liaison. If the student cannot document in the second year that they have or that they are an unaccompanied homeless youth or at risk for homelessness, they need to reach out to the school's financial aid administrator. And we have the authority to interview the student ourselves. And if based on that interview with the student, we can make the determination that they are an unaccompanied homeless youth, and we can override the status on the FAFSA and make them independent. So Your question is very good in that we understand that first year they're in contact with that high school liaison. If that liaison is still in contact with the student going into the second year and can still certify their status, then the student can still go with that certification. Cody, I don't know if you deal with this very often, so if you have any other comments to add to that, that's just been my experience with the students I've worked with.
Yeah, and that's been my experience as well. We have also, you know, so there are, you know, there could be an advisor that the student may work with. We have what are called success advisors at the University of Dayton, and so they work with students a little more holistically than an academic advisor might, and they may know a little bit more about, you know, what is going on in that student's life, you know, outside of college. And so we've taken, you know, statements from those persons, so they intimately know the student, in addition to, you know, us also interviewing the student as well. So, you know, I think there's other ways to kind of obtain that information and documentation. It looks like there was a question about a parent was using the IRS data tool and got the page that said, you know, transfer the info, and then told her once she clicked it that she needed to work with the Department of Higher Education. I'm sorry, the Department of Education. You know, what does this mean? I'll let others jump in, but I think, you know, probably what that may mean is that there could have been some issue with the transfer. You know, there could be an issue with tax filing status, or an issue with the address maybe not completely matching up. So that parent may not be able to use the IRS data retrieval tool. Faith or Morley, any other insight there?
The only other one that when their information won't transfer that I'm aware of is if this family experienced identity fraud related to their tax return, it will not allow that information to be transferred over into the FAFSA. So that's the only other situation that I'm aware of that will not let that information transfer when everything else seems to be okay. We also have a question. Somebody must have jumped on the website that says that it shows 0% of FAFSAs completed for your district. That is because the data for the 21-22 school year has not been posted into the new system yet. They have shut down the FAFSAs that were completed for this current academic year, for the 2021 year. They will be posting, I think their projected post date is mid-October, the first set of FAFSAs that have been filed for the 21-22 year. So that may be why you are seeing 0. The other thing is just to verify to make sure that all the appropriate paperwork has been signed and completed for your district to use. We'll give you one last chance here to type in any of your financial aid questions. It's like one is, what is the best and most common time to host a financial aid night? Cody or Faith, you want to jump in there? And
yeah, I would say, you know, a lot of high schools and other organizations are doing them kind of right now, you know, right as the FAFSA is opening. And I think the reason for that is, you know, as a presenter is covering, you know, not just the types of financial aid that are available to students, but often they will cover, you know, the FAFSA, how to obtain an FSA ID, how to submit the FAFSA, you know, so that a parent and student can go right home that evening and, you know, start the FAFSA if they wanted to, or sign up for an FSA ID if they wanted to. And so, you know, it kind of helps keep the information fresh in their minds, so that, you know, they're actually doing it as they go. And many colleges and universities, you know, have those priority deadlines for the FAFSA that, you know, might be anywhere from, you know, even as early as potentially like an October 15th date, all the way to, you know, February 1st or March 1st type date. And so I think, you know, anytime between, you know, now and you know, what would be probably the latest deadline of February 1st or March 1st would be a good time to do one of those events, because again, it allows the family to kind of go home and take what they're learning in that financial aid night and directly put it into practice, filing the FAFSA.
I think the other thing that you see in terms of common times is probably the most common nights are Tuesdays, Wednesdays, and Thursdays. You know, if it were a typical year, typically you wouldn't in the fall on a Friday night ever host one. Everybody would be probably at the local football game. Sometimes Monday evenings, you know, may not be time. You know, a lot of counselors try to remind students when students are in person through school announcements and things like that, and so you can remind folks on Monday that the workshop is that week and it's Tuesday, Wednesday, or Thursday. You see 7 p.m. is probably the most common time that we see for a financial aid night, you know, so lasting maybe an hour to an hour and a half, you know, type of presentation, maybe quicker this year as things are done virtually. So you also see a pattern where some schools will host a financial aid information night in the month of September. And then as we move into October, November, and December, they'll hold FAFSA completion events, which you know, is something completely focused on FAFSA completion only. Lots and lots of schools this year are conducting those FAFSA completion events virtually using Zoom or some of the other options that have breakout rooms. So those are some of the other things we see.
I'll go ahead and, oops, sorry, Morley.
Yeah, go ahead, Faith.
Go ahead and add to that. We already talked about it, but we can't stress enough that we are here to support you even in these unusual times. So if you would like us to host a virtual financial aid night, please go on to the OASFA resources and submit your email, and we will assign you a presenter. We have, you know, the ability to do virtual presentations, but also on our website is a recorded financial aid night for the current year, and you can download that and share that in an email or on your website with a handout to your families. So if you know you're not prepared to do a virtual live presentation, you could use that recorded version. The last thing we want is for your families to not get the information about this financial aid process. It's more important now than ever that we make those connections with your families.
Thanks, Faith. All right. One last chance to type in your last question. If we don't have any more questions, pop in. We want to thank you for taking time to join us this morning. As I mentioned earlier, please strongly encourage any of your colleagues who were not able to attend today to register for one of the future workshops so that they can join us. Not at this point, not seeing any more questions pop in. So on behalf of OASFA and Cody and Faith and myself, again, thanks for attending today. Is there an evaluation form? We have not developed one yet. We will probably have to make a decision as the outreach committee because the workshops are spread over various months this year. If we create one, we will send it to you via your email for registering. So thank you for asking.
We should also mention that if you want to obtain a certificate of attendance, we have that available as well. Morley, you may have already mentioned that, but you know, just email us at outreach@oasfa.org and we can send that certification form.
Yeah, thanks, Cody. That was my closing note here. So thank you for doing that. Yes, any of you who can use this for your professional development, email us at outreach@oasfa.org and we can do a certificate with your name for attending today. Good luck this fall with your students. Please know that if you have any questions, financial aid questions, you can always use that outreach@oasfa.org email, and we will try to respond to you as quickly as we can with any questions that you may have about the financial aid process. And please don't hesitate to contact a local financial aid administrator too, who may be able to assist you. So again, thanks for coming today. Have a good day, and best of luck working with your students this fall.